Banks must continue to innovate to stay relevant or risk getting perished.
Hi everyone, welcome to Cloud 10, helping you get most from cloud. Our aim is to bring exciting topics for discussion to our audience, including architects and CIOs. I'm really excited about our second podcast, and today we'll be discussing future of retail banking. Banks are some of the biggest user of cloud technology, so this topic is very pertinent to our audience. Over the last decade, banks have faced the fallout from global financial crisis, regulatory reforms, birth of new competitors, and now a global pandemic. To weather through, banks must build greater resilience for the future. Today, we'll be discussing factors that are driving the innovation, players in the industry, and technologies at play. I'm Vinay Gandhi, a digital transformation architect with few decades of experience in IT industry and have been helping organizations transform using cloud technologies. Shashank?
Thanks, Vinay, for a quick introduction. I am Shashank. I am seasoned cloud architect and have been working on cloud transformation programs since 2010. I specialize in cloud strategy, integration, and native app development. Let me set up the context for our audience. So here is a quick agenda. We will be covering customer segments that the banks and non-banks institutions are targeting, key players in the market and their challenges. This will be followed by strategy, architecture, and technology. Let me introduce you to various customer segments. These are corporates, high net worth individuals, SMEs, and consumers. Corporates, these are big giants. Examples are Rolls-Royce, Shell, Centrica, Marks& and Spencer, and Tesco. This segment is covered by commercial banking. High net worth individuals, these are the individuals with high levels of income, sizable assets. This segment is catered by private banking. SMEs and consumer are covered by retail banking and is the focus for today's discussion. SMEs are the small to medium enterprises. This could be sole proprietors to companies up to 250 people and with turnover up to 50 million. UK SMEs are a large and growing market with turnover of 1.9 trillion and accounts for approximately 99% of the private companies. Products offered to this segment are lending, transactional risk protection, and insurances. Consumer segments, these are the individual members of public. Services offered to them are savings, mortgages, personal loans, payments, and card services. This segment is further segregated by age. Baby boomers, which are currently in the age of 55 to 70 years of age. The segment is less digitally savvy and would like to visit the bank physically instead of accessing over the internet. Generation X and Generation Y, this is the middle spectrum, typically between 24 and 55 years of age. They are the current workforce. Gen Z is the youngest consumer segment, aged between 5 and 24. These are digitally savvy customers who are accustomed to consuming banking services using digital medium. For these customer experience and social media based interactions are key. Some of these individuals will soon transition into employment and therefore are key customer segment to tap into. Now let's investigate key players of the market. Starting with non-banks and fintechs, these institutions are extremely successful and profitable. They are targeting specific needs of the customer segments. For example, Monies offer banking services to European migrant workers who may not be able to open bank accounts due to lack of address or income. TransferWise offer foreign exchange services to individuals and businesses. Challenges for these institutions are that they are not able to offer one-stop shop experience to their customers. Neobanks, these are the digital banks and can only be accessed via mobile and digital medium. They are targeting Gen Z and SME customer segments. They have trebled in their size in last couple of years and have successfully captured roughly about 3.5% of the market share. They are lowest. They have the lowest customer acquisition cost, up to 1/5 of traditional and challenger banks. In spite of winning Gen Z's attention, these banks have not managed to build a sustainable business model and are not profitable. Consumers of these banks consumers use these banks for petty expenses but are reluctant to trust the brand with their life savings. Some examples are Monzo, Starling Bank, N26, and Revolut. Challenger banks. It covers to about 11.5% of the market. Examples are Nationwide Bank Building Society, Virgin Money, which is now sixth largest bank in the UK, Metro, TSB, and Handelsbanken. For these banks, growth journey has been either by merger or acquisitions of smaller banks, e.g. Clydesdale Bank taking over Virgin, or by demerger of established entities into independent identities. Example is TSB. They have been slow in adopting digital bandwagon and losing the market share to neobanks and fintechs. Last but not the least, traditional banks. These are the 5 largest banks in the UK, covering about 85% of the market share. Barclays, Lloyds Banking Group, HSBC, RBS, which is now NatWest, and Santander. There are fair bit of similarities between the challenger bank and traditional banks. Both type of banks have asset heavy. They are asset heavy and have largest branch network on the high streets. Both types of bank have sustainable and diversified business model, which have earned them unshakable consumer trust over the years. Both have been slow in adopting digital bandwagon. Looking ahead, they need to win attention of Gen Z. Now that we have seen customer segments and the players of the industry, let us briefly discuss the importance of staying relevant and innovative. On the left, you can see a different set of companies that are leading innovations. It is evident that at the top are tech leaders like GAFA and fintechs. The traditional banks and challenger banks are relatively slow. If they continue on this path, their result will be same as some of the brands on the right who cease to exist. For example, around 2000, Blockbuster had an opportunity to buy Netflix, but it didn't. They failed to recognize impact of rapid technological changes in streaming and internet speed that could affect customer behavior, switching from physical media to digital consumption in a very short span of time. In less than 10 years, Blockbuster went out of business, and now Netflix rules the world. The rest of the brands on the right also have similar stories. Jack Welch's quote sums the situation very well. If the rate of the change on the outside exceeds the rate of the change inside, the end is near. Let's dive into details of why traditional banks and challenger banks are losing market share to neobanks, fintechs, and big techs. The number one is digital experience. Pandemic has forced people or prohibited people to visit the banks physically and left no choice but to adapt to digital channels. Looking ahead, Gen Z is already accustomed to consuming mobile-based one-stop shop digital services. We have already seen neobanks are successful in this segment. Some of the success factors for neobanks are that customer-centric horizontal culture. They have asset-light model and platform-centric business. They have very good partner ecosystem, and they have built personalized products based on customer behavior and AI-driven insights. These banks are providing value-added services like fund management, analytic tools, ease of purchasing partner products. The next one is culture. Traditional banks predominantly have cost-centric and risk-averse culture, which lacks fail-fast analogy. They have verticalized product culture, which many a times operate in silos. It hampers their ability to leverage customer insights and within the bank and externally as well. Legacy technology and increasingly complex regulatory requirements have been limiting factors in rolling out product innovations quickly. Banks are under immense cost pressure as margin and profits are dampening with interest rate falling. Current Bank of England base rate is about 0.1%. This means for many banks, cost of service delivery is impacting the sustainability of the business model. There is a genuine need to deliver more with less. To make things difficult, big techs have already launched consumer-friendly banking payment services. For example, Tencent, Alipay, Google Pay, Facebook Libra, Paytm. These firms are capturing rich customer insights to build innovative and personalized products. Going forward, banks would lose out on the customer insights if the incumbent do not react quickly. Handing over to Vinay to discuss the strategy, architecture, and technology to address some of these challenges.
Thanks, Shashank, for setting the context beautifully. Let's jump straight into what the solution entails. Now that we know the challenges banks are facing, the origin of solutions lies in the bank transforming themselves from inside out. Banks must modify their DNA, their core, to improve their posture to face the disruptive future ahead of themselves. Let's see the makeup of core of a modern bank. It would not cut with reskinning exercise or developing feature here or a service there. Bank would need a new digital backbone, and by that mean a new operating model. Bank would require agility of a tech giant to respond to market events, for example, regulation or what we are seeing now these days in the form of pandemic. Culture that supports and allows for a fail-fast laboratory approach, and that would mean shifting away from risk-averse approach. Embracing new technologies such as artificial intelligence, machine learning, analytics, and blockchain. And finally, bank must be secure by design. Banks are generally good at security. However, in all digital future, this becomes even more critical. If previous slide is about building the core of a modern bank, then this slide is about solutions bank would need to offer to their customers. Omni-channel banking, allowing customers freedom to access their finances anywhere, anytime, via any medium. And not just simple products, bring this to complex products. Open banking, access all financial services in one place, loans, savings, bills, insurance, etc. Embracing new mindset which puts customer needs at the heart of banking and personalize this experience for the customer. Easy banking to provide customer experience. The examples are, for example, Monzo and Starling Bank app allowing customers to analyze their spends in the app and creating saving buckets to manage the funds. Starling Bank provides customer to deposit checks up to 500 using the app, avoiding the need to visit the bank physically and standing in the queue. Robo-advisors, this would mean providing interactive real-time chat experience or look into the trends and provide product recommendation. Let's have a look at how traditional banks can deliver this transformation to offer personalized products to Gen Z. Big bang approach to build digital platform is riskier. For example, TSP Bank's transformation gotchas in 2018. Ideal approach would be to go for a phase-wise transformation and deliver an API-based platform known as platformification. The one-size-fits-all model is fading away in favor of ecosystem of interdependent partner. It helps non-traditional players to connect and scale with partner using API. Platformification allows firms to respond to market events effectively and with agility. However, despite the advantages, banks are reluctant to take transformation action due to high constraint on resources and risk associated with poor implementation. So it requires careful consideration. So banks can adopt this by either building in-house product like HSBC did with MuleSoft, or acquiring a platform what BNP Paribas did by acquiring Competent Nickel, or collaborating with existing players. For example, certain European banks are leveraging Raisin, who offers fintech marketplace. The second part of the puzzle is developing partner ecosystem. So bank would need to develop and nurture a strong partner ecosystem to take benefits of API-based platform to provide array of services to the consumer to ensure all their needs are met without leaving the bank's platform. This would mean two-way sharing of data to create customer insights. And finally, cloud is an obvious choice as it offers all the benefits of scaling rapidly with its ability to respond to market events at the same time staying cost effective. Evidence suggests majority of the innovative companies have a cloud backbone, so this is a no-brainer. Aptly put by Director of BNP Paribas Open Innovation. In the short to medium term, successful platform innovation will help to create new value sources and drive business growth. Platform models will diversify revenue pools and more services and partners and create a new digital ecosystem. Let's see what all technologies will play a role in the future of modern banking along with architecture patterns. So a loosely coupled and fault-tolerant architecture, event-driven architecture, microservices architecture, along with hybrid cloud. Blockchain by providing a distributed ledger for KYC, payments, trade finance involving multiple banks and regulatory agencies. Analytics, AI for fraud detection and consumer recommendation. Neobanks are major users of these technologies. For example, Monzo uses AWS Cloud to deploy a modular core banking system with container orchestration and over 100 or 1,000 microservices. Finally, the whole ecosystem is secure by design, where security is not an afterthought, but implemented on all layers and supported by DevOps frameworks at scale. Let's have a brief look at a reference architecture. So various actors, including users, support, and third-party apps interact with bank services via an API gateway. These requests are handled by a collection of purpose-built microservices, and some of these microservices may be interacting with existing legacy systems. These microservices layer is implemented using highly elastic container approach using technologies like Docker and Kubernetes. All these services will log events in Event Hub, and leading contender here is Kafka, that is widely adopted by industry for similar use cases. These events are then picked up by various services, for example, notification services to send alerts to user, fraud detection services to look for malicious and unusual activity, a recommendation engine that can be built using Spark or Cassandra using slow batch processing and popularized by Lambda architecture. Over to you, Shashank.
Thanks, Vinay. So in summary, we have covered various customer segments, players in the market, their challenges and solutions. In short, there are following key takeaways. Banks must continue to innovate to stay relevant or risk getting perished. Banks must win expectations of Gen Z to retain and grow the market share. Banks are facing challenges like legacy tech, risk-averse culture, and lack of external eco-partner systems to offer rich digital services that are at par with neobanks. Big bang approach to implement a digital platform from scratch would be riskier and cost prohibitive. Banks should consider platformication approach to deliver phased transformation using API-based platforms. Banks must establish external partner ecosystems to offer personalized banking and non-banking products, creating a one-stop shop experience that consumers are looking for. Event-driven microservices architecture built on scalable and cost-effective cloud platform would be a key. Adoption of predictive real-time analytics based on AI and machine learning, coupled with collaboration across different banks, institutions, regulatory agencies using blockchain technologies will help further product innovations. Whole ecosystem should be secure by design, where security is not an afterthought, but implemented on all layers and supported by DevOps frameworks at scale. Finally, neobanks should continue their innovation journey to make the business model sustainable by transforming the products from freemium to premium. Hope it has given you a good overview of where the retail banks are and what the future would be. It has been enjoyable and learning experience for us discussing about these topics and hope you felt the same. Please feel free to share your comments and suggest the topics that you like to hear about via LinkedIn. We hope to talk to you soon. Thank you for listening.
Bye-bye.